Hey everybody, we're going to dive into Zillow, a stock I recently decided to finally sell after holding it for about 3 years. I sold it at a pretty substantial loss, so I want to dig into the reasons why I finally decided to get out. And before we do, please take a look at fool.com/Frankel, the link you see on your screen. Get the top 10 stocks to buy right now from my sponsor, The Motley Fool. It's the best way to support this work I'm doing on YouTube. All right, again, that's fool.com/Frankel. So like I said, I finally decided to sell Zillow. I've been holding it for about 3 years, and I am down significantly. The stock is down about 65% since I bought it. Good investors need to own up to their losers, especially when things are, I generally only sell stocks if the original reasons why I bought them no longer apply, and that's definitely starting to be the case here. But let me just share real quick. So this is a performance chart of Zillow since I bought the stock. You can see in the same time, the S&P 500 is up by 24%. Zillow is down by about 65%. Now, there are a few big reasons for that. The most obvious one is that the real estate market has slowed down considerably since 2021 when I bought the stock. That was, the strongest real estate market in modern history. There was very cheap mortgage rates. People were paying well over asking price for homes, getting into bidding wars. It was just a really kind of crazy time in the housing market, and that has clearly cooled off a lot since 2021. And the other big reason is that Zillow essentially shut down half of its business. At the time I bought it, and one of the big reasons I bought it was for Zillow's iBuying business, which was called Zillow Offers, where Zillow was essentially doing what Opendoor does. They were buying houses directly from homeowners and doing cosmetic repairs and then selling them directly, hoping to profit from the spread in between them. Now, my thesis and a lot of other investors' thesis was Zillow has the best real estate data set in the world. They're the ones who developed the Zestimate for home valuation, a long time ago, and have kind of been honing it ever since. So my idea was they were going to be able to win the iBuying game because they knew how to price and predict pricing better than everyone. Clearly, I was wrong. They were wrong, and they ended up shutting down Zillow Offers right around here on the chart. Was when they decided to abruptly close Zillow Offers. So that's when that big leg downward happened. And the general real estate slowdown combined with that has really just kind of created a lull for the stock. Has underperformed the S&P 500 kind of dramatically. Let me unshare my screen real quick. And so I want to dive into the latest numbers, which look good. Zillow posted better than expected revenue in the first quarter, better than expected earnings. On an adjusted EBITDA basis, they had a 24% profit margin, which is really good. I've said before, the premier agent side of the business is very profitable. For the longest time, the iBuying was what was making them lose money. The actual core business is a pretty high margin business and is profitable. Particularly strong was revenue growth, rental revenue growth, and mortgage volume was a real kind of standout. Let me share that too. Okay, so here you can see residential revenue. This is the premier agent business. These are agents who either subscribe to Zillow services or pay for leads, pay when they can close a sale. Zillow gets fee-based income off that. And you can see the first quarter of 2024 was not only great year over year, but it was the highest quarter they've had in a little while. They've been doing, the real estate market has kind of picked up in 2024, especially in the first quarter, because when the year started, remember that mortgage rates had dipped a little bit. They've come back since. The rental revenue is that second chart right there. You can see that the growth has just been great. The rental market's actually very strong right now. So there's a lot of people looking for homes to rent and things like that. And on the mortgage side, and this is what I find really interesting, the first quarter of 2024, mortgage revenue was up 19% year over year. And you can see throughout 2023, it had kind of fallen down, and it suddenly jumped in the first quarter of 2024. those are the lower mortgage rates I was mentioning. We saw home inventory pick up in the first quarter, and we also saw mortgage rates kind of down probably about a percentage point lower than where they are right now for most of the first quarter. Remember, it was a little bit later in the first quarter when we realized that the Federal Reserve is probably going to keep rates higher for longer, and that's when mortgage rates started to react to that and increase back to the 7% plus range. But for the most part, especially in the earlier part of the first quarter, rates were pretty attractive. And purchase loan origination volume has roughly doubled year over year, more than doubled year over year. Zillow is not only benefiting from the strong trends there, but they are taking share of the mortgage market, which is kind of what they wanted to do. Um, Zillow ended the quarter with a total of $2.9 billion in cash. So it has great financial flexibility. It could acquire most real estate rivals that do what it does, the same things that it does. Like, that's a higher market cap than Opendoor has. With Zillow's cash on hand, they can buy like 4 Redfins right now if they wanted to. So financial flexibility is definitely a strength of Zillow. So far, I've been giving reasons why I shouldn't have sold it, but now I want to kind of get into the forward looking and why I did sell it. So the earnings results weren't all great. I just mentioned some of the good highlights. The monthly unique users were actually flat year over year, despite the uptick in real estate inventory, which kind of tells me they might have maxed out their user base for the time being. Their second quarter guidance calls for significant revenue deceleration. So a much slower growth rate than we saw in the first quarter. Their compensation structure is kind of, a little out of whack, in my opinion. $400 million, a little more than $400 million in annualized stock-based compensation is a lot for a company with about a $10 billion market cap. I'd like to see them get that under control. And honestly, I don't believe in their future vision of the company. They had the super app is kind of their big, growth strategy right now. So if you're not familiar, the super app is generally an all-in-one real estate app, which is almost what Zillow's app is today. They want to, facilitate things like mortgage approval, touring, buying a house, financing, selling a house, making payments to various parts of the home buying and selling process, all through the same app. And that's their big growth strategy, is to become like the one-stop shop for real estate. Because if you've ever bought a house, you generally have to deal with several different vendors. They say that right here. It's kind of complex. You have to deal with a different title company, different escrow company, different moving company, different appraiser, et cetera, et cetera. And putting them all in one app is a natural solution. I kind of get where they're coming from, but Zillow's already like 80% a real estate super app, and I don't see that as a gigantic long-term vision, especially considering what's going on in the National Association of Realtors lawsuit that we've been following. If you're not familiar, if you don't remember, a consumer group sued the National Association of Realtors and several of the big real estate brokerages, essentially accusing them of price fixing, for forcing the seller to pay a 3% commission to the buyer's agent in every transaction. The logic is, why can't buyers just pay their own agent? That way they can negotiate that price, and it's more of a transparent transaction. And courts ruled on the side of the consumer group. So the lawsuit was eventually settled. The National Association of Realtors will now no longer require buyer's agent commissions to be part of MLS listings, which is huge. That is a game changer for residential real estate. I want to be very clear on that. This doesn't go into effect till July, so it won't be in the second quarter numbers that you see in a few months. This won't really be apparent in the numbers until the third quarter, if at all. It might take till the fourth quarter till it's really apparent. The effect of this is buyer's agent commissions could plunge, because if you were shopping for a home, you've never had to pay a buyer's agent out of pocket before, you might be a little more inclined to negotiate that 3% down to something like 1%, 2%, or even skip using a buyer's agent entirely. A lot of experts are predicting that people are going to try to, go around using an agent and things like that. This doesn't really affect the seller's agent. But Zillow makes most of its money, and this is really important to know. A lot of people don't realize this. Zillow makes most of its money from the buy side of real estate transactions. Zillow makes 48% of its money. It's the biggest component. It used to be over 50%. 48% are from buyer's agents. That is not good at a time when we don't know what buyer's agent commissions are going to do. If a buyer's agent goes from making 3% on every sale to making 1 or 2% on every sale and having a tough time convincing people to use buyer's agents at all, they're not going to have as much of a marketing budget for services that like the ones Zillow provides. So to be clear, I think the sell side of the business is going to be fine. The residential side of the rental side of the business is likely to keep growing, as long as the rentals market stays strong, and the mortgage business should grow significantly. But it's that 48%, this big chunk on the buy side, that really is the main reason that I think I'm going to pack it up and move on. In fact, I already did. Um, I said the original reason I bought it was for iBuying. I was willing to wait it out and see kind of how Zillow's super app vision played out at the lower valuation. My stock had already plunged a bit after the iBuying decision, so I figured at that valuation it was okay to let it ride. But after the National Association of Realtors lawsuit, I'm not really willing to sit around anymore. I think even at a 64% loss, it's the best move to sell and redeploy that capital into something else. So that's exactly what I did. Tell me your thoughts. I want to know what you think about Zillow, the super app, and pretty much everything they're doing. I'll do my best to respond to everybody individually. Thank you for listening. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times, so go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.